Hey crypto friends, for those of you who are new to the channel, my name is Garrett and welcome to Altcoin Radar. Now, since I absolutely love teaching people the basics of crypto trading, today I'm going to show you guys how easy it is to go short on the 15-minute charts with nothing but a few simple EMA indicators. Now, for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so before I go ahead and dive into this video and show you guys how you can easily short this market with nothing but using EMA indicators, and that's it, the first thing that I want to talk about here real quick is you don't need a screen full of all kinds of different indicators to be able to be profitable in this market, okay? It doesn't take that. There's people out there who trade with nothing but price action without any indicators whatsoever, and they do very, very, very well on a regular basis, all right? So keep that in mind as well, okay? So the very first thing I want to talk about here is you're not going to be using just the indicators. I mean, you are going to be using just the indicators as far as what's being visually displayed on your screen, but as far as that goes, you also want to be using charting patterns and candlestick patterns and stuff like that as well. Actual price action, the stuff that's being visually shown to you on the charts themselves, okay? The actual candlesticks themselves, okay? Understanding this stuff will help you greatly in determining how you trade this market, okay? So the very first thing I want to talk about here and what I want to show you here is this video is all about shorting the market. And the reason why I am doing a video on shorting the market is not because I'm bearish. It is simply because I trade both directions. And when you're trading the 15-minute charts and charts that are even lower than the 15-minute charts, like the 5-minute and 1-minute charts, you want to be able to have all the tools that you need to be able to trade in both directions. That way you can profit from both the short-term upswings and the short-term downswings as well, okay? So that is what I'm going to try to do here with you guys, just solely based on these EMA indicators themselves. I'll do more videos in the future with other indicators and how to short with other indicators as well, but today is all about these EMAs, okay? So what we're going to do here is I'm going to show you which EMAs I currently use, and what I usually use is I'm usually using the 20-period EMA, which is this blue one up here, and I'm using the 200-period EMA, which is down here as well, okay? In my opinion, these are my two most important indicators, or two most important moving averages that I like to use on a regular basis, okay? So how you would do that is you go to indicators and you just type in EMA, and the one that I usually use is this one right here, EMA 20, 50, 100, 200 by Dr. Sweets, and you'll click on it and it will add your EMAs to the charts. Now, when you have them on your charts, you want to go to the gear icon or the settings icon, and you want to go ahead, the 50 period and the 100 period will be turned on when you turn yours on, but you just want to turn them off if you want to use the same ones that I use, okay? I'm not saying you have to use the same ones that I use. I'm just saying that I use the 20 period and the 200 period most often because they just simply work the best for me, or they work the best for my overall trading style. So the way that these work is, the one thing I want to point out here real quick is I love using the 20-period EMA. And the reason why is because it's very, very, very simple and easy to use. It's very straightforward. When price action is bullish on the 15-minute charts, or pretty much any chart realistically, when price is bullish, price action is always going to be on top of the on top of the 20-period moving average. And when price is bearish, as you can see right here in this downswing here, price action always is below the 20-period EMA, okay? Let me go ahead and show you a different example. We had a very long bearish slog right here, okay? During this bearish time, as you can clearly see, when price action was bearish, the EMA stayed on top of the price action at all times, okay? Now, we've got a big, gigantic upswing right here, and as you can clearly see in this gigantic upswing, once again, when it was bullish, the price action was always above and on top of the 20-period EMA. So that's kind of the point that I'm talking about here. And you want to keep this in mind when you are making entry and exit decisions in trading the market here overall. Okay, so What I typically like to do is I typically like to, on the 15-minute charts here, what I like to typically do is I like to go ahead and I like to mark out the current range highs and the range lows that we've got going on here. So right now we've got this range low down here, we've got this range high right up here. And then what I like to do is I'm looking at the 20 period EMA and I'm looking at the 200 period EMA. Now, what I do with the 200 period EMA, which is this longer one down here at the bottom, is what I use that one for typically is I typically like to use it as a more of like a momentum indicator type of deal. So basically, I use it a lot for support, okay? Which, as you can clearly see, it came down, like right here, it came all the way down to the 200 period EMA, and it acted as support, and it didn't go any further than this 200 period EMA, and it ended up shooting right back up. So it worked as support right there, all right? Now, we are touching it once again, so I will be looking for it to either bounce off of here or eventually break below it and fail. And if it ends up going below this support area between this or within this range, then obviously it's probably going to more than likely end up dumping even further than that, okay? So the way you look at this is, for instance, if I am trying to short the market here, all right? For instance, here is a good example right in here. And this is what I'm talking about with candlestick patterns, okay? So we are going to go ahead and look at the candlestick pattern cheat sheet that I found online, which is right here. And we can clearly see we have got all kinds of basic bearish candlestick patterns going on right here, okay? Right here, this is the shooting star candle, and this is the gravestone doji candle, okay? These two candles show up a lot with when on the 15-minute chart when bearish momentum starts to take over, especially the shooting star candle, okay? So keep that in mind. And that's typically what we've got going on right here is we've got a bearish shooting star candle that formed right up here. So what do? We wait until the next candle opens, and when that next candle opens, if it ends up opening in the red, which it clearly did, then you're pretty much safe to go short and ride it down to the next level or ride it down to where this 20 period EMA is. Now, if you were to if you ended up doing that, you would have made roughly around right here with 10x leverage or something like that, you would have made roughly around 20% profits right there within an hour and 30 minutes just from trading that way. Now, you can hold it longer, but only if it does end up going further down. So obviously, when it's at this point, you don't know if it's going to go further down or not, right? Remember what I was mentioning earlier? When price action slips beneath and below the 20 period EMA, typically it means that things are very, very bearish and price will continue to fall further below that, okay? And as you can clearly see, it took a while, but it did eventually end up falling even more. So it's up to you. It's really all your choice, up to you. You could either end up selling right here for that 20% gain, or you could end up holding it for longer with a solid stop loss, way up here somewhere, and end up waiting for it to potentially drop even further, which it clearly did. Now, the one thing you do want to do is you want to stay out of the market when price action is kind of dancing with the EMA right here. That tells you that there's a lot of indecision going on in the market, and we're not sure if we're going to go up again or if we're going to drop again because we're kind of dancing around with the moving average there, all right? But since we already had this one big drop from the top right up here, that pretty much tells us that, we are due for a trend reversal and we are due for, movement to the downside even further. And that's exactly what happened. Like I said, it took a while. Let's see how long it took. It ended up taking roughly around 6 to 8 hours or somewhere around there, but it did eventually fall, okay? So if you were to have ended up trading this right here with this EMA, if you didn't end up selling right here, and let's say you ended up holding it on even longer, you could have made roughly around 27% right there if you would have sold right in here at the end of this candle, or if you ended up holding on to it for the long term there for those 8 hours, you would have profited right around, closer to, 45 to 50% profits right in there, all right? So this is what I'm talking about here, guys. Shorting the crypto market, it is not a scary thing. It's literally the same thing as going long, just in the opposite direction here, okay? That's literally all it is, all right? So For instance, right here with the price action that's going on right now, what I would be personally looking for is obviously if this 15-minute candle ends up closing below the 200 period EMA right here, that tells me that things are extremely bearish and there's a lot of bearish momentum going on here, and there's a good chance we could end up falling down below this support level down here. Now, if we do end up dropping to this support level down here, then what I will be looking for is I will be looking for these EMAs to cross the 20 period and the 200 period, because they will eventually cross if the momentum is strong enough. And if they do end up crossing, then that's another good example to go short. Now, the one thing you don't want to do is when, let's say, let's say the price action is all the way down here and it's already at the 200 period EMA, and on top of that, it's already deviated super far away from the 20 period moving average, okay? When price starts to deviate super far away from the 20 period moving average in either direction, whether you're going long or short, it's going to end up reversing at some point in time very, very soon, because that's typically just how it works, okay? Usually when we deviate super far away from these moving averages, we typically end up reversing, just like you can see right here. We got all the way to the top, way up here, deviated super far away from this 20 period EMA, and we ended up dropping. We ended up dropping right after it. Same thing right here. We ended up going really high, deviated really far away from the 20 period EMA, and we ended up dropping, all right? Now, the same thing is true with going with short positions as well. So for instance, if you were trading this, you would want to get out when it starts to deviate really far away from this 20 period moving average, which, as you can see right here, right at the bottom of this candle, from here to here, that's a very far deviation from this moving average right here. That tells you that we are going to be reversing here very, very soon, and clearly, as you can clearly see, it did. So that is kind of overall what I am talking about here. Now, if you guys have any questions or anything like that, feel free to go ahead and reach out to me about this kind of stuff in my free community Discord channel if you want to. You can find a link to it, or sorry, you can't find a link to it anymore. That's right, I closed the server to open invites. You'll have to reach out to me on my Twitter profile, Garrett_N_stuff, and send me a message and ask me for a Discord link, and I'll send you a link to my free Discord server, and I will help you out with whatever questions you have regarding any of this or anything like that, okay? So overall here though, guys, before I go ahead and wrap up this video, if you want to see more videos like this, more educational trading videos, you can find more videos exactly like this in my technical analysis playlist here on my channel. You go to playlists and go to technical analysis, and they will all be right in here. I've got all kinds of very, very good educational videos that I store right in here, and all of these types of videos go right in there after I publish them as well. But other than that, guys, let's see here. If you enjoyed this video, be sure to subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts of the video. And with that said, for those of you guys who stuck around and watched this whole video throughout the whole thing, thank you guys very much for watching. I appreciate all of you, and I hope to see you all in my future videos as well.